Good morning, my name is Chartpunk and this is your daily dose of Bitcoin. Before we get to the charts, I have two comments for two news that we received yesterday. The first interesting news is an article that I found on Substack. It is made by Dirty Bubble Media, and basically in the article they lay the claim that Circle and Paxos and their stablecoin issuance might be considered and qualified as money market investment funds. That is a very, very interesting speculation. They have very good reasons for this in the article, and probably this could be the reason why the SEC is currently running an investigation against these entities. Now, I am more on the assumption that these entities are financial institutions on the field of e-money business, just like Revolut, PayPal, or TransferWise. So I am not 100% convinced that they would act as money market funds, but I definitely advise you to check out this article. It has some very, very interesting statements and claims. The second news that I brought for you today is basically a chart, the US 6-month Treasury yield chart. What we see here is that the bond market is not pricing in the optimism that the stock markets and the crypto markets have been doing in the previous weeks. Yields on the bond market are in a constant rise and they have reached the yield level of 2007. The 6-month Treasury yield is now above 5%, and this fact to me does not really indicate an expectation of a dovish Fed in the close future. Just note that the bond markets are the biggest capital markets in the world. The bond markets trump the stock market and the crypto markets, so it is very, very important to follow the yields if you want to see which way global finances are going. Bitcoin chart. On the weekly, there is not much change since yesterday. Obviously, we are still at this very, very important confluence level of the 3-period and the 7-period moving averages. This zone around $22,000, that is very, very important. The bulls should try to get Bitcoin back above $23,000 in order to avoid this bearish cross of the two short moving averages. In the Consensus trading system, which is a moving average based trading system, if the two short moving averages make a bearish crossover over the long period moving average, that is signal for an investor to a little bit decrease the exposure to a certain asset. This bearish cross is what the bulls should avoid happening on the weekly chart. Let's see what we see on lower time frames. 3-day chart, what we see here is that this bearish cross has already happened between the 3-period and the 7-period moving averages. So in the Consensus system, this has been the place to a little bit decrease the bullish allocation to Bitcoin. However, the structure is still looking very, very nice. The 30-period moving average is ascending and the two short-period moving averages are way above the level of the MA30. The Chartpunk trading system is painting the candles on the 3-day chart green consistently. It means that the trading system is indicating a bullish momentum on the Bitcoin market on this time frame. 1-day Bitcoin chart, this is where it gets really, really interesting. What we see here is that at the level of $23,300, the two short moving averages have prepared a bearish crossover. This was the indication for Consensus system traders to a little bit exit the position or decrease the bullish allocation to Bitcoin. And here the two short period moving averages have completely crossed down the long period moving average. Why I would not say that this is a complete exit situation from the Bitcoin market is first of all due to the longer time frame bullish trend structure, and secondly what we see here is that Bitcoin right now is at a very, very important support level here at 21,500. This is a previous high in the price action and the price is very, very nicely using this level as support. What we see as well is that the two short period moving averages have performed a bullish crossover just below the long period moving average, and the MA30, the red line, is still ascending. So we have a very, very nice chance to get back into this upper zone. All we need to do is tackle the 22,500. This is currently the level of the MA30. And if we do that, then we can get back into this range, which has been a clear distribution range in the previous price action of Bitcoin. This is somehow how I would indicate the main resistance that is standing in front of the bulls if they are able to get back above $22,500. If we take a look at the oscillators, then what we can see is that the RSI has been divergent from the price action. It has been decreasing since the price was here somewhere in the 21,500 zone. This to me is indicating this price action above 21,500 as a deviation. And now what we are seeing is that the price is bouncing from a nice support and the RSI is bouncing as well. It is back above its moving averages. This to me is indicating a wake in the momentum on the market. And my own momentum oscillator, the Chartpunk momentum oscillator, is clearly also leaning up. I am looking forward this indicator to make a bullish cross like it did here. See what happens when this indicator is giving you a bullish cross. It happened here on the 3rd of January, and after that there was a very clear bullish price action on the Bitcoin market.